All right, let's bring in Kevin Green, senior markets correspondent, to help set up some of the other action we're across today. Let's start out with a look at CrowdStrike right now. It's got an upgrade. What are some of the details here?
And we're seeing the shares up about 1.9% here, and this is after BTIG upgraded CrowdStrike to a buy from neutral with a price target of $431. Now, they are making a mention here that the improved visibility after the July 2024 IT outage is actually going to be something that's a tailwind for this company. They believe that they have been able to map out at least the impact that we saw from that particular outage, and the acceleration in growth, especially in the second half of fiscal year 2026, is also providing a little bit more of an upside here compared to the street's expectations. And they do believe that the street's expectations for 2026 and 2027 are relatively low compared to the trends that they are seeing in private data here. Now, they are considered the cleanest platform play when you're looking at the software side and security side of CrowdStrike's business here. And they do believe that they're going to continue to dominate the core endpoint security market in general. So they do believe that it is justified, that it has a premium valuation. And once again, they do see some more upside here. But I think the clear read through is not only just the impact that we saw from July of last year with that IT outage, but the fact that cybersecurity is going to be something that will continue to ramp up and when it comes to spending for a lot of these enterprises.
Yeah, it's wild to see how CrowdStrike has recovered and then some from that outage back in July. Where does it seem to go from here in terms of the trend? Obviously, it's higher in the pre-market. Do you notice anything about the patterns and how it's been trading?
Well, obviously, we saw a little bit of a pullback in CrowdStrike, just like pretty much a lot of stocks in the S&P 500, especially when you're looking at tech. But it does appear that it might want to go up and try to test at least that $404 level that has been an area of resistance that we saw back in February. And if it is able to break out of that, there are some gaps still to the upside where you get close to that $455 level. Any type of breakdown from here, you're looking at around $320 as your first area of major support. And anything below that, you're looking at around $275. So let's say that right now is trying to make a recovery. I wouldn't say that they're out of the woods yet, just based on the chart trend, but they're in the, let's say, the upper quarter quadrant of the price action over the last year or so, which is, once again, a good thing. So another stock that's trying to recover, having some pretty decent news, needs some follow through to start not only just this session, but over the next couple of sessions here. And once again, $404 seems like that's the next area of resistance for this stock.
All right, let's take a look at KB Home. That stock, though, under some pressure this morning off the back of their latest quarterly numbers. Take me through some of your takeaways, KG.
Yeah, I mean, when you're looking at KB Homes, I would say it's not a surprise. We're starting to see maybe some of this slowing when it comes to the new home market really start to permeate within a lot of these earnings announcements here. And we are seeing the shares down about 7% in pre-market trading here. They did miss on not only the top line, but also bottom line. The adjusted earnings per share came in at $1.49. She was looking for $1.59. And the revenue came in at $1.39 billion for the quarter. She was looking for $1.5 billion. And they did cut their guidance moving forward. Their fiscal year 2025 revenue guidance right now is set for $6.6 billion to $7 billion. That's the range. Previously, it was $7 billion to $7.5 billion. So obviously below the street's expectations here. But I think the big thing that is popping out when it comes to this report and their guidance moving forward is actually the fact that you are seeing average selling price move to the downside, and they are expecting that to actually come in even lower. The average selling price for the quarter came in at around $500,000 even. But if you're looking at their guidance moving forward, they're actually expecting the average selling price to come down to $480,000 to $495,000 for the fiscal year. And you're looking at gross margin guidance or profit guidance here contracting to 19.2 to 20.2%. Obviously lower than what they previously had here. So you're seeing a company that is seeing an issue when it comes to the consumer. Obviously, higher interest rates is having an impact. The fact that they have to discount is having an impact as well. And the stock's seeing a move to the downside.
Yeah, it's interesting to hear the CEO highlight the consumer and weakening confidence of the consumer and how that is playing out in terms of demand within the housing market. It goes to show that, you still do have to pay attention to the soft data. And obviously, though, to your point about interest rates, a certain level matters to unlocking more demand there. But let's broaden out. I want to talk to you about the levels that you're looking for on the S&P 500. Obviously, we had a big gains yesterday. We punched through the level that you were looking for to the upside, 57.60, what you were looking for. We ultimately finished at 57.67. So where do we go from here today, KG? What are you looking for to the upside and to the downside?
Yeah, if we continue to see a continuation, yields going a little bit higher here, showing that risk on tone, selling out of treasuries, getting into equities, you're looking for the upside around 5,800. You are seeing some paper above that level, but 5,800, it gives you around, 33 points to the upside for today's session. And then to the downside, 57.05. It's still a fairly wide range. You're expecting that to actually kind of come in here over the next couple of sessions here as volatility tries to drop to the downside. VIX is sitting at around 17.2%. So a little bit over a 1% implied move, a daily move on the S&P 500. But Diane, the big thing, VVIX, so vol of vol, actually hit July levels from last year. And that's actually a really decent sign for bulls. Hopefully the tariff conversation in the sentiment that we had yesterday is followed through today, and we don't get any curveballs coming from the White House to kind of knock us down here.
And then you said 57.35 to the downside.
57.05 to the downside.
57.05, sorry. And then, so are there any other technical patterns that you're looking for, or is it all about potentially headline risk and news flow that sets the tone today?
Well, I mean, you are seeing, at first you have to say that obviously we had a technical correction in the S&P 500. I think that you still have to label this as a counter trend rally for now until you get to around that 58.65 level. Once you kind of cross that, that's where you you kind of break a key retracement level when you're kind of looking at Fibonacci's from high to low. So that's the area that I'm looking at as far as trying to maybe get some additional buyers to step in. And right now, this could be a potential short zone when we are crossing the 200-day moving average to the upside, as well as the 20-day. That's also another area where sellers might try to, sell into some of this strength. And then last but not least, the 50-day moving average, if you kind of look at cycles just in general, especially bear cycles, is usually the major moving average, which is somewhat close to that 58.65 level, sitting at around 59 and some change right now.
All right, KG, thanks a ton for the setup for today.